Residence equity finance. In simple terminology, a residence equity finance is a funding taken versus your home. A home equity car loan is also called a mortgage or a second mortgage. Another synonym for residence equity lending is equity launch schemes. While taking a home equity funding, you are actually obtaining the well worth of your residence. If your house is totally had by you, after that the term utilized for home equity car loan is home loan, or else if your house is not completely paid off yet has equity, it is called a bank loan. From now on we will utilize one term for both to promote much better understanding. We will certainly call them residence equity loans. A residence equity lending is an extra funding that you take versus your home in addition to your mortgage. For this reason this is called a bank loan. This makes it possible for a homeowner to liquidate equity without refinancing the very first home mortgage. Many people are under the impact that the only way to increase money is by marketing their residences. Nonetheless, reality varies as well as factually one can take a second mortgage to free up the first home mortgage additionally. Equity is the distinction in between the amount you owe on your current home mortgage and the present value of your house. Furthering this definition, expect you market your residence, the quantity of cash money left in your pocket after paying off the home mortgage is called equity. This equity when taken as a financing from a lending institution, without actually marketing your house happens called home equity lending. Many loan providers or loan companies permit you to borrow bigger amounts determined by subtracting the equilibriums of superior home mortgages from 125% of the market value of your residence. Nevertheless, the actual equity is the distinction between evaluated well worth of your home as well as the equilibriums of your outstanding home loans. There is no bar on how you can make use of the home equity car loan. You can use it for any objectives as it fits you. A residence equity loan is normally an one-time fixed interest rate financing, which is paid out at one go. The interest rates or the cost of the funding will certainly depend upon alternatives you choose, viz., the regard to the car loan and also the quantity. Certainly another important element has constantly been your credit history ranking. The longer the regard to the funding, the a lot more you pay out as rate of interest. Additionally, if the amount is extra, the more interest you pay. As constantly with any type of responsibilities one takes on, certain words of caution are recommended. Examine all your choices thoroughly before making a decision. Choose the amount very carefully and take just what you require and define the term which you assume would fit for you to pay back in. No point accumulating liabilities in exchange for investing on enjoyments or obtaining unneeded properties. House equity car loans are easily obtainable to individuals with poor credit rating, given that the lender is taking a lower danger as the funding is secured against their residence. A home equity loan normally indicates that you get the best rate of interest on the funding, i.e. you get the funding at a lesser price compared to various other car loans due to assured safety and security. However, one should constantly keep in mind that your home goes to threat lest you fail to settle the house equity loan. Home loans: a basic introduction. During the current period of years, it has actually been observed that the need of home loans has enhanced. The major reason being, the availability of loans in market has boosted as well. Mortgage are nowadays available out there at rather reduced and appealing prices. Home loans are recent craze in the loan market nowadays. The reason being the fact that house constitute out as the biggest possession that generally people have. While acquiring a home, the person has to spend a very substantial amount of cash. Some people deal with problem paying the whole cash with each other for your home, while some can't also manage to invest cash for the home of their option. Home loans, in this manner, have become a boon for people who want to have a house of their choice, but cannot afford it. Currently worried purchasers currently days do not have to think of the resource of money for their houses. Home loans have actually made the life of a great deal of customers really simple. Yet the customers should take care while deciding or opting for a home mortgage. They need to initially make a thorough study of the prevailing interest rates on the market, and after that choose or go for any mortgage. Borrowers can even opt for mortgage by carrying out home mortgages. In this, the consumers take a car loan after promising or safeguarding any asset or safeties of theirs, versus the sum borrowed by them. While choosing a mortgage, the individuals ought to look after the other different facets associating with the home mortgage. An individual before going with a mortgage must make sure, prior to determining the primary quantity, that he is most likely to borrow as a mortgage. Otherwise the person may end up taking a funding with a higher primary quantity and afterwards end up paying more interest for the amount that he had obtained unnecessarily. The second element that the customer need to consider is the rate of interest element associated with every home loan. Interest is an undesirable burden that comes attached with the home mortgage. Rate of interest is the extra quantity that the consumers have to pay for taking the car loan from the lender. The debtor's motto should be take a funding which brings the lowest interest rates. For this, the debtor should make a complete research study of the dominating rate of interest on the market to make sure that he does not get ripped off by the home mortgage lenders. Consumers ought to likewise consider the aspect of the term associated with the loan that he has taken on, otherwise they may end up paying or settling the finance for 30 to 35 years, just because of the truth that the loan's problems had actually mentioned that the major quantity has to be paid back on repaired quantity over 30 years installment basis. Mortgage are a boon for individuals, yet they ought to be careful before choosing a mortgage.